insurance premium calculation. Premium basically is the money you pay to the insurance company. That's what premium is in terms of the terms used in insurance. So there's a calculation for premium so that you get to understand it and you don't get lost on the long run. Basically, like I said, I'm giving an example with Ogre Farm, like I've said, but for various livestock, different animals, and for crop production and different farm structure and property and all those things, they have different packages for them based on the insurance company that you have in place. But they always have a regular standard that is being used anywhere in the world. So we're looking at, for instance, for pig farming, for instance, if you want to insure your pigs, let's say you want to insure your pigs now, there are two categories for it. There's a category for local pigs and there's a category for exotic pigs. So for local pigs, the premium you're supposed to pay to NAIC, the Nigerian Agricultural Incorporation that we are using, is 2.5% for local pigs. We are paying 2.5% of the worth of the animal. Let's say your local pig is worth 20,000 naira. So you are supposed to pay 1,000 naira, which is 2.5% of 20,000 naira is 1,000. So that is what you're going to pay for NAIC for the worth of that pig. But mind you, you cannot, when you insure your local pigs, you cannot get paid if a loss below 10 pigs happens. So if you are doing insurance now for local pigs, that means you have to do for at least 10 and above. So if anything happens until it is up to 10 pigs, 10 local pigs, before they will pay you 90% of the worth of that animal you have. So when you are going in to do local pig insurance, get to know this twist. If you are doing with NAIC, they only indemnify you for your loss if you lost 10 local pigs and above, and they're going to pay you 90% of the worth of that pig. But there's another category for exotic pigs. These are the foreign pigs. These are pigs that have their own premium that is to be paid for them is 5%, which is 5% of the worth of the animal. Let's say you have an exotic pig that is worth 100,000 naira. 5% of 100,000 naira is 5,000. So you are paying 5,000 naira to NAIC as insurance. And in this case, one and above, from one, even though you lost one pig, they will indemnify you for that one pig and pay you 90% of the worth of that animal that you have insured. Also, there's another package that handles African swine fever. Because of the outbreak of African swine fever, like I've told us, in sub-Saharan Africa, NAIC have thought it wise to create a package that will be able to handle ASF, because most farms have shut down and have gone out of business because of African swine fever. So NAIC thought about it with their wisdom that it is best for them to create a package that will handle African swine fever. So if you are taking a normal insurance package for local pigs, you can now also take in addition with the policy for African swine fever. And the package for African swine fever premium is 5% of the worth of that animal. So let's say you have local pigs now, you are insuring them at 2.5%. Then the cost of insuring ASF is 5%. So when you add the 2% together, that is 2.5% plus 5%, that is 7.5%. So if you pay 7.5% of the worth of your local pigs to NAIC, if there is a loss of at least 10 pig and above, they will indemnify you for that loss and pay you 90% of the worth of those pigs, of those local pigs. Then for the exotic pigs, since you have, which is 5% already, that is the premium you are paying for them to the insurance company. Then if you add it up with the 5% for African swine fever, which is now making it 10%, with this 10%, you'll be able to, if there is a loss on your farm, you pay 10% to NAIC. If there is a loss on your farm in the course of your 12 months of insurance, NAIC will pay you, NAIC is going to pay you 90% of the worth of the animal. Even though it is one that is lost, they will pay you for that one. So there's a more detailed calculation on our training video, because we have a masterclass training video on Peak Farming Like I've said over time. We have a masterclass training. Insurance is comprehensively handled in that training package, where you get to understand it and calculations with figures are used, and you learn better and get to do a good comprehension, so that with those sample calculation and demo calculation, you'll be able to see how you can reach it for your farm before you approach, and how you can know how to go about it. So thank you very much. And anywhere you are in the world, I will encourage all farmers to please take an insurance policy. Have an insurance policy on your farm. It is for the own benefit, not for another person's benefit, so that in case something goes wrong, your staff will not be out of employment, you will not be out of business, but you always have money to restock your farm and get it better. We don't pray for evil, or we don't wish ourselves evil. We are always saying that we should follow the right standards. But while following the right standard, always prepare for something. That is why the insurance is not just for only physical disaster like sickness. No, natural disaster like flood, an earthquake can happen, and your farm will be lost. But if you have insurance, this will cover for it, and you will also be able to, at least while feeling pain, have a reason to put a smile on your face. Thank you very much for seeing our video. We encourage you to follow our page on Instagram, Facebook. Also subscribe to our YouTube channel, so that you can learn more from our various videos we've been dropping previously. And we encourage you to ask us questions, comment, give us your opinion on how we can serve you better and be better. Thank you.